Hello, welcome to Citizens Talk. I'm Stephen Wise, CEO and President. With me is Joshua Buckley, Senior Credit and Risk Analyst at Citizens National Bank. So Josh, what's on the agenda today?
We're going to talk about the banking industry. A lot has been made recently of the bank failures of Silicon Valley Bank and Signature Bank, and it has everyone wondering that do we anticipate more widespread bank failures, or are these just isolated incidences?
You've probably heard a lot about the banking crisis that we're in right now. The two banks that failed were unique in the fact that they had high levels of concentrated risk on their balance sheet. And community banks just don't have those kinds of risks on their balance sheets. It's been business as usual, and it doesn't feel like a crisis to us. After 123 years of banking in Central Texas, this is not our first rodeo. The banks that failed had a crisis in the confidence of those banks. But clients in community banks trust their bankers for good reason, because they know them. There's been no widespread bank failures after the initial failures, and really, I don't anticipate that to happen in the future.
So bank lending plays an important role in the U.S. economy. Do you think these bank failures are going to cause banks to become more risk adverse and shut down their lending processes?
That's a good question. I think that first off, banks are always looking for good loans. What you might see is some tightening underwriting standards. Just as an industry, banks might increase the cash flow requirements on loans or request more equity for a lower loan to value. Maybe it not make as many policy exceptions as they have in the past. So you might see those kinds of tightening of underwriting standards, but all in all, banks want to and will continue to lend.
Well, that concludes this episode of Citizens Talk. Thank you for tuning in, and please tune back in next time.